If you're saving or investing for your retirement in euros, dollars, pounds, or any other fiat currency for that matter, you're taking a bet that most people don't realize they're taking. The US debt crisis, or rather how the US will deal with their debt crisis, is devaluing every pound, dollar, or euro you have saved or invested. In this video, I'm going to explain what the US debt crisis means for your retirement portfolio and how you can hedge against this inflationary crisis and the debasement that's happening every day up until the day you retire. So the US is in $38.7 trillion worth of debt. Now that might just seem like an arbitrary number, just a number, but the things I'm going to tell you now should make you quite uncomfortable actually. The $38.7 trillion worth of debt is actually way more than America's GDP, that's a gross domestic product. So the debt is 120% more than the country is actually producing in terms of economic output. So over the last 10 years, it's spiked up massively because of irresponsible fiscal policy. It doesn't matter who's in charge. It doesn't matter who the president is. This debt crisis is unsustainable. It's not going away. And finally, the government will spend 1.2 trillion on just interest payments alone. They're not even paying that debt down. To get around this, the US will end up printing more money and enter it into the system. Now, the problem with that is the more money that enters the system, it devalues the money you've already got. And the US aren't the only country that prints money. They all do it. If you aren't already, you should be putting more of your savings and retirement investments into hard assets like gold, silver, palladium, and even Bitcoin. Because what I'm about to share with you in this video explains why Bitcoin isn't just a speculation. It's a rational response to a system that is paying for the past by weakening the money you hold for the future. The US government is trapped inside this debt spiral that even experts are kind of worrying that it's not a sustainable outcome to this. There is no sustainable outcome to this. To put this into context, right, if the US government was your household and the US debt was your mortgage, the bank would have pulled the rug from underneath you long ago. Famous economist Peter Schiff put it very bluntly. We're headed for a US dollar crisis and a sovereign debt crisis. Central banks are buying gold to back up their currencies. They're getting rid of dollars. They're getting rid of treasuries. When central banks start diversifying away towards gold instead of like US treasuries and the debt, it's really not a good sign. Now, I'm not a doom and gloom guy. I'm not here to predict crashes and things like that. But I want to ask a very simple question. Do you want your retirement wealth in a currency with a government that is paying insane amounts of interest on debt to foreign creditors who are actively walking away from that debt? And for me personally, that's where Bitcoin comes in. Look, I get it. Bitcoin's incredibly volatile. Your auntie, your uncle might think Bitcoin's a scam, but I want to look at it over a 5 to 10 year horizon. Unlike dollars, euros, or pounds or pesos, Bitcoin exists outside the monetary system, right? Governments can't print the value away like they can do with dollars and euros and pounds. There's only 21 million Bitcoins in circulation, right? There's no exceptions to that. There's no printing into oblivion. There's no money printing ever. That's it. It's a finite, scarce resource. When governments face a fiscal crisis like the one we're seeing now, they've only got two choices, right? Number one is default in the debt. Yeah, default in the loan. That's not going to happen. That will disrupt the monetary system globally, probably have a crash and a recession off the back of that. And the second one is to inflate the debt away by injecting more money into the economy, by printing more money and devaluing what's already out there. Historically, the governments, whether it's the US government, the British government, whatever, they always choose to inflate the debt away because politically it's a much easier option. You don't see the headlines, government cuts debt by 50%. What you see is like, Federal Reserve expands balance sheet. It's the same thing. It's the same concept, just a very different language. Bitcoin is the opposite of inflation. It's fixed supply in a world of unlimited money printing. Every dollar interest payment, every treasury auction that struggles, every credit rating warning, we saw one massive one in 2008 before the massive financial crisis. It all reinforces why Bitcoin exists, why it was invented. Bitcoin was literally born out of the 2008 financial crisis, where it was a response and a hedge against monetary and fiscal instability. The worse the fiscal situation gets, and it's continually getting worse, the more sense it makes as Bitcoin as a hedge. Now, I'm not saying Bitcoin's going to go up in a straight line. We can see that. It doesn't go up in straight lines. It does follow market cycles, but the long-term curve, the long-term compound annual growth rate is always going up. So to give you some more context on that, the reality is if we get some short-term financial crisis and recession, yes, Bitcoin will become even more volatile. It will probably go down for a short period of time as we're seeing now. Bitcoin's a risk asset and it's a bit further down on the risk curve, so it will drop alongside everything else. The market doesn't care about long-term fundamentals and thesis and narratives when people are panicking and selling everything for cash. Think about this: the short-term volatility is the price you pay for long-term protection against monetary chaos and perpetual debasement and inflation. And if, like me, you're building a retirement portfolio with a 5 to 10, 15-year horizon, you can afford to ignore the noise out there and the narratives. Think of the noise out there and the volatility as temporary. It's a little bit like bad weather, right? Some people like to weather the storm. They'll buy and hold. You probably heard the term hodl or hold on for dear life. I don't do that. I use a traffic light system. I've made a video about it. If I see the markets are rallying, there's good structure, there's good buyer behavior, there's a nice inflow of liquidity into Bitcoin, I'll hold Bitcoin now and I'll ride those sustained rallies. But when I start to see structural risks in the market, if I see liquidity drying up and poor behaviors in terms of money flows and things like that, then I start to rotate back to stable coins and preserve my capital. I don't like buying and holding. I like Bitcoin as an asset because I think it's got a great upside potential, but I'm not married to Bitcoin. I'm not a Bitcoin fanboy. It has those huge volatility spikes that when I see structural risk in the market, I step out, I let the drawdowns happen, and then I buy back in and compound my profits as price sustains, as price rallies up. The entire point of my traffic light system helps me navigate the volatility without really getting shaken out. Bitcoin is not about getting rich quick. I know you might have heard stories about people in crypto getting rich quick. There's the odd exception, but that is not the rule. Getting rich across any asset class is exactly the same. Bitcoin's volatility is a benefit to me. I will use the volatility to compound wealth over a shorter time horizon. But trust me guys, there is no get rich quick schemes in crypto. Also, it's not about checking the price every hour, every day, every week. This is about recognizing a fundamental shift in the way that money works and positioning yourself accordingly in what I believe is going to be the trade of our generation with asymmetrical upside, right? So there is downside, but the upside is much, much higher. Now, obviously, I can't predict the future. No one can. But I do have expectations where we're going to be over the next 5 to 10 year time horizon. There is absolutely no realistic scenario where the US pays down this debt. They ain't going to pay down $38.7 trillion worth of debt. It's just not happening. The only question is, how does this crisis unfold? When you're paying $1.2 trillion in interest alone, confidence erodes massively. Other countries are already seeking alternatives. We've seen the price of gold and silver rocket up. That's not an accident. That's central banks running away from US treasuries and the US debt, parking their reserve and their capital into something more stable, more solid. In a world of unlimited money printing, finite supply wins, guys. This is just fundamental basic economics. Supply and demand, scarcity creates value. Fact. As more institutions and countries and sovereign wealth funds and family offices start buying more and more Bitcoin, that volatility will only compress as time goes on. That doesn't mean it becomes stable overnight, but the trajectory, the long-term horizon, 5, 10, 15 years, it's incredibly clear. Now, I know this is called the Bitcoin retirement playbook, but I need to be very, very clear here. Now, I'm not saying put your entire retirement into Bitcoin because quite frankly, that would be reckless. But what I am saying is you can't ignore Bitcoin. You can't ignore it because it's risky. I think for me, the real risk is holding your retirement wealth in currencies that are slowly eroding their purchasing power and also being debased at a rate of like 11% per year. And that's not just an opinion, guys. That's math. So what do you actually do with this information that I'm giving you today? Here's my perspective on it. Bitcoin isn't perfect. We're going to have brutal drawdowns over the next 5 to 10 years. You have to ask yourself whether you can stomach these kind of drawdowns. Since buying Bitcoin, I've questioned myself and tested my conviction many times. But if you follow my Substack, you'll see that I've been trading Bitcoin the last 3 years and I've turned $1,500 into $10,982. So I'm quite confident. In fact, I'm very confident in the traffic light system that I use where I rotate in and out. So my conviction is good. But if you are thinking long term and you want to protect your wealth and your purchasing power through a potential money crisis, Bitcoin deserves serious consideration. If you want some perspective, and if I'm putting myself in your shoes, here's how I would think about Bitcoin. Don't bet the farm, guys. Allocate an amount that will help you sleep at night, right? Because volatility is manageable when your position size is appropriate for your risk appetite. If you need this money in 6 months' time, Bitcoin is not the answer. Bitcoin is a risk asset, it's a cyclical asset. You need to be holding it 3, 5, 7, 10, 15 years. When you're building for 5, 10, 15 years, the math changes and it's compelling. Risk management is absolutely non-negotiable, guys. This is why I use a traffic light system. It helps me rotate in and out the market based on structural risk and no emotions. If you want to learn how the system works, I break it down in a lot of detail in more videos, and I also trade my portfolio publicly on my Substack, link in bio. But the core principle is this: I'm not trying to time the market perfectly because no one can. I'm trying to survive long enough to benefit from what I believe is a multi-decade monetary shift in how the whole system works. Survival first, upside second. So let me bring this back to where we started, right? The US have a debt of $38.7 trillion. It's not going anywhere, it's just going up, right? Those interest payments of $1.2 trillion ain't going anywhere. Of that 38.7 trillion, 9.1 is held by foreign treasuries who are actively walking away from that debt. That is a ticking bomb. You can either hope everything works out fine, hunky-dory, but I'm telling you guys, it rarely does. The other option is you can allocate a bit of your portfolio in an asset that was designed specifically for this type of scenario, specifically for monetary and fiscal chaos. So I get it, Bitcoin is volatile, Bitcoin is uncertain, but let me ask you this. Is holding Bitcoin riskier than having your money embedded within a government who has been running the Federal Reserve like a piggy bank for the last 10 years, who has absolutely no plan or solution to a spiraling debt situation? Listen, I know where I'm putting my money for the next 10 years. If you want to follow along for my journey, real trades, real transparency, zero hype, you can head over to my Substack. The link is in the description. I'm documenting every decision, every trade, every mistake, because I think the best way to learn is to actually watch someone do this in real time with their own money, their own real risk. There's no hypotheses, no paper trades. It's my money. It's a real portfolio. Thanks for watching. If you want to find out how I got myself in the situation and why I created the Bitcoin Retirement Playbook, have a look at the video in one of these corners and I'll catch you on the next one.